Continue with the subunit 2.3 elements formats of financial statements. So today we will discussing about what are the format or how we are preparing the formats of elements of financial statements. In previous class, we have seen that what are the elements of financial statements. In that we discussed about the cost sheet of a business, trading account and income statement, in trading account and income statement, and cash flow statements. Okay, so let us start with the elements of formats of elements of financial statements. Let us discuss that how the elements will be discussed, or how the elements, how these elements formats will be prepared, and what all contents will be available in that, how they will be treated, and why they will be treated, and where we will get that information. So I'll be sharing my screen. I hope my screen is visible. So this is subunit 2.2 called formats of elements of financial statements. So you can see that the first format is cost sheet of a business. Okay, this is the format. So here you can see there they given the cost sheet as on certain date will be given, number of units produced. Okay, any kind of business will be there, their cost sheet as on for the date where we are preparing, at what date we are preparing, and number of units produced. So how many number of units we have produced for the year. So that will be together, it will be given. It depend on the business, it depend on the organization, that how much they are producing when they are preparing this cost sheet. So you can see that the cost sheet will be having a three columns called particulars, total in rupees, and per unit in rupees. So every each unit, the cost sheet definition or cost sheet itself tells that for each unit how much rupees we are spending. So right, the first and foremost, the item we are recording is opening stock of raw materials. Opening stock of raw materials in the sense the previous year's closing stock will be taken as a opening stock, means new year available stock with us. So that will be called as a opening stock of raw materials. Next, we need to add any kind of purchases of raw materials will be there during the year. If any purchases we have made, if any raw materials were purchased, that will be added here. And next, in any kind of carriage inwards in the sense, again we are purchasing any kind of uh, certain materials or spare parts, that will be added here. So altogether will become the altogether will be added to the opening stock of raw materials. And less closing stock of raw materials. Closing stock of raw materials in the sense, if it is you're preparing for a month, if you're preparing for a particular day or any kind of period, so that day's last closing stock, how much raw materials are available, that value will be recorded here. We need to deduct that value because we are using from the closing stock, and whatever the value will be remaining, from that we will get the actual value. Okay, next is less materials returned. If any purchases you have made, and in that any kind of materials are having any fault or any default or any kind of defects you found. So if any materials you are returned to the vendor or from whom you purchased, so that will be deducted here. So total will be called as a direct materials consumed. Direct materials in the sense the raw materials, how much we are consuming, and number of units, how much units are there, and what is the per unit price. Next, in this, we are going to add direct labor. So what do you mean by direct labor here? For a labor, what is you're going to pay the wages? What all wages you are paying for a labor, direct labor? Okay, to directly labor, how much wages you are paying? So the labor will be having a the labor, which it depends on the nature of a labor, and also it depends on the nature of a business, that what kind of they are paying the wages. The wages will be paid on a monthly basis or weekly basis or else a daily basis. Okay, these three kind of ways they will be paying the in certain times they will pay on basis of the working hours also. Okay, how much a labor is working, according to their working hours they will be paying the direct labor. Okay, next is add direct expenses. So to purchase these raw materials, to converting these raw materials, what all the expenses will be included, that will be taken here as a direct expenses. After all deductions and additions, we will find a prime cost. Prime cost in the sense what all the primary cost we are beared for the, or what are the primary cost we are incurred for the business, and total number of units or per unit price. Next is, in this we are going to add the factory expenses or work expenses, or we can call it as a works on cost. So during this time, what all the factory cost we are having, or what all the factory expenses were beared, like machinery charges, depreciation, machinery depreciation, and electricity, and rent, rates, taxes, gas, fuel, what all we used, all those will be come under this factory expenses that will be added. Okay. Next comes the opening stock of work in progress. Opening stock of work in progress in the sense any kind of product we are having, it is working under, it is in a process. It is still going on. The work is pending. Like for example, if a car manufacturing is there, a car body is there, and in that machine is fitted or machine is installed, but we have to install only the doors and the seat and glasses. So this will be called as a work in progress. Like we can call it as a under construction of house. Okay. So that value, so how many, that kind of, how many we have the stock with us, how many we have a material with us, that which is in a work in progress. So that will be added. Next, closing stock of a work in progress. So what is the closing stock of work in progress here? So whatever for an end period where we are preparing this cost sheet for that day or for that month, so that value, how many were left with us? So that will be called as a closing stock of a work in progress. Next, less sale of salvage. Sale of salvage, if any scrap materials will be there, if any wastage will be there, by selling that, if you get any revenue, that will be deducted here. So after deductions from prime cost, these all factory expenses, we will get the works cost, or called as a factory cost. That will be a total amount and also the per unit price. Next, we will add the office and administration expenses. For office expenses, what all the salary we are given, how many employees are there, and what all furnitures we have. On that furniture, we are reducing the depreciation. And next, printing charges, stationery, postage, tea and coffee, and advertisement. And we call it as, another one is like uh, electricity charges, which is used for internet charges. So Wi-Fi charges, those all will be telephone charges. Those all will be deducted. Those all will be added under this administration expenses. So after deducting from work cost, so after adding in work cost, we will get the cost of production. So actual cost, which we are beared on the total our total our goods. So that will be cost of production, total amount, and per unit price. Next is, in that we are going to add opening stock of finished goods. So how many we have a opening stock? So how many stock we are already finished goods? So completed goods, how many stock we have? That value we will be adding, and in that we are going to deduct the closing stock of finished goods. So how many closing stock are there which is finished, which the product is finished, like car which is completely manufactured. So what are the values, how many we have? So those all will be given. So for to calculate closing stock of finished goods, number of units into cost of production per unit, so we will get the closing stock. So if you don't have, so you can go for a number of units available and cost of production per unit. So how much is the cost of production per unit? By multiplying with that, you will get the closing stock of finished goods. So after deducting from the cost of production, adding the opening stock and deducting the closing stock, we will get the cost of goods sold. So how many cost, at what cost we are ready to sell our goods. Okay, and per unit prices. Next, we are going to add the selling and distribution expenses. So what will come under this? So here under this selling and distribution expenses, we will get the distribution charges and supplier charges, salesman salary, sales manager salary, the vehicles we are using, advertisement, the marketing promotion charges, marketing charges. So those all will be added in this selling and distribution expenses after adding to the cost of goods. So that will be called as a cost of sales, or a total cost which we are going to bear. And after that, we will get if anything will be remaining, if any profit will be there, so that will be after deducting from the sales. So what will be the total sales? Here we are going to add the positive figure, that how much we are going to add the profit. So after that we will get the total sales and cost per unit sales. Okay, so this is what the cost sheet tells. Sorry for the interruption. Next is the trading account for the year ended. So same thing, if any trading account we have to prepare, if any business's trading account we want to prepare. So here you can see that trading account for the year ended. So here to opening stock. So first trading account will be started with the 4 columns, that will be debit side and the credit side. And here we will have the particulars we will have, and the amount column, and again particulars and the amount column. So the right hand side will be called as a debit side and the left hand side will be called as a credit side. Okay. Now, so let us start with the trading account. So here trading account will be having the opening stock. So what all the opening stock value we have. Okay. And next to purchases. So what all purchases we are having, we will take it as an inner column and we will deduct the what are the returns will be there. So whatever the returns will be there, that will be deducted. So that will be total becomes the total purchases or net purchases we called it as. Okay. Next is to direct expenses. Under direct expenses, which we are appearing or which are available during the time of our core activity of a business, core production of a business or core activity of a business means core business activity. We call it as a core business activity in the sense, while what is the core business activities? Manufacturing, manufacturing in the sense what it is, converting of raw materials into the finished goods. So that is the core activity or core business activity we call say. Okay, so here direct expenses will be directly involved in the business. Okay, in that carriage inward in the sense any kind of we are getting any loads are coming inside, if any sales we did. Okay, so any sales are returning back to us, so that will be told as a carriage inward. Okay, next freight is for while transacting the goods from one place to another place, we are storaging, we are storing in our one particular godown. For that freight will be charged. And octroi in the sense our business charges means our business producing certain goods. For that goods we are shifting it from one place to another place. For that the transportation, whatever the fees will be there, so that will be called as a octroi. Next is doc dues. So doc dues in the sense if any kind of dues were there, so related to the documentation, so that will be called as a doc dues. Next is excise duty in the sense on our manufacturing we will pay the certain excise taxes, so that will be called as a excise duty. In case next is royalty. In case if we have any kind of royalty, if we have taken any patents, if you have taken any copyrights, for that we need to pay the royalty. Next is motive power in the sense if any kind of power is required, if any kind of sources are required, energies are required, for that motive power will be added. Next is any kind of fuel will be we are using, coal, gas, water for manufacturing purposes, so that will be added here. Next is factory expenses. If any factory expenses were involved in this, so that will be added in the debit side of the trading account. Next comes the credit side of the trading account, whatever will be there. So by sales. So if any sales we are doing, so what is the major revenue we get? What is the major revenue? By selling the goods, whatever we produce, by selling them, we will get the major revenue. In that, less returns. So if any sales returns will be there, so that will be deducted. So after that, whatever the value will be remaining, that will be called as a net sales. Next is by closing stock. So what do you mean by closing stock here? If any stock is left with us for the year ending, so the day when we are preparing the trading account, if any stocks were there with us, that will be called as a closing stock. Okay, so after all, we will total it, whichever side is higher value, that side we will take the total value. If, for example, credit side is more and debit side is less, so that the total value will be taken both sides same, and we will deduct all these values in this total value. So whatever the value will be remaining, that will be called as a gross profit. If it is a profit, if it is a more value remaining, that will, then it will be called as a gross profit. Or else if it is a vice versa situation, means if it is a debit side it is more and credit side it is less, so the debit side value will be taken to the credit side total value, and next we were deducting the total available balances. So whatever the last balance remaining, that will be taken as a gross loss. So I'll be telling you, if it is a debit side, then it will be a profit. If it is a credit side, if it is a loss, then it will be a loss. Okay, so this is what the trading account tells us. Next is profit and loss account. So the next comes the profit and loss account, or we can say it as a uh, income statement also. Okay, so what profit and loss account sells? So profit and loss account for the year ended. For every year ended, we will prepare the, usually it will be prepared at a year ending. Okay, so here in profit and loss account, again same debit side and credit side, two major partition will be there. In that, in debit side we have a two columns called particulars and amount, and in credit side also particulars and amount. Okay, in debit side, what all we will be record? We will record all the indirect expenses, so which is indirectly affecting to the businesses. And in debit and in credit side, we will record all the indirect income, so or non-operating income. So that indirect expense incomes or expenses will be called as a non-operating expenses and non-operating income as well. So what all will be here? So you can see the gross loss brought down. So whichever, if you are earn, if your business is having gross loss, so then it will be taken to the debit side. If it is a profit, then it will be taken to the credit side from the trading account. And next to salaries. So salaries will be paid to the employees. Okay, and next to office rent, rates and taxes. If any office rents will be there, any rates will be there, any taxes will be paying on that, so that will be taken here. Next, printing and stationery. If any printing and stationery bill will expenses will be there, that will be recorded here. Telephone expenses, postage and telegram, discount allowed, if any discount you are allowing to your regular customers, insurance, if you're paying any insurance, audit fees, any auditors will be coming, external audit will be coming, and for them you are paying the audit fees. And electricity charges, repairs and renewals, depreciation, advertisement, carriage outwards, bad debts, provision for bad debts, selling and commission, bank charges, interest on loans, loss on sale of asset. So these all are what? These all are the indirect, these all are the non-operating expenses which are affect in or which are incurred during the business time. Okay, next comes the incomes, non-operating incomes or indirect incomes, we can say. In that, discount received. If you are a regular customer to any of one of your major dealer or major seller, so for them, if you're a regular customer, so they will give you the discount. And commission received. So being a middleman, you're shifting some, if you're doing certain things, so then any kind of commission will be there. Or if you're doing any transaction between the two parties, so then you will get the commission on that. And bank interest. So you have kept some deposit on in your bank, by on that you're getting the interest. And rent received. If you're having any property or let it out, so on that rent, if you're receiving any rent, so that will be called as a rent received, that is non-operating income. And dividend on shares. If you are invested any shares in any businesses, so on that you are earning any dividend, so that will be taken, that will be considered as a non-operating income. Next, interest earned on debentures. If you are a debenture holder for some of the businesses, okay, so then that will be that interest earned on that debenture will be taken as a non-operating income. Next, profit and sale of asset. If you are selling any asset and if you earn certain profit on that, so that will be taken as a profit on sale of asset. And same thing, what we will do, whatever we did in the trading account, same thing we will do. We will calculate total amount column from the both side. Whichever side is more, we will take the total column to the both the side, and we will deduct the total values which is available in that side. For example, if it is a credit side more, so both side we will take as a credit side. And if it is here it is more, means in the sense if it is debit side it is less, so the whatever the remaining differentiation value, so that will be taken as a net profit. And if it is debit side more and credit side less, the difference value will be taken as a net loss. Okay, so this is the profit and loss account. Okay, next is cash flow statement. So one of the major and important part. So in this cash flow statement, there is three major part called as a, you can see here alphabet A tells us that cash flow from operating activities, cash flow from investing activities, cash flow from financing activities or funding activities, we can say. Okay, so these are the three major heads under which there are certain transactions will be there. So from operating activities, in the sense while doing our operation of our businesses, while operating activity or while uh, dealing with the businesses, what all the cash flows will be there, like the cash received from customers, cash paid to employees and suppliers, cash generated from operating activities, dividend received, interest received, tax interest paid, taxes paid. So those all will be taken as a cash flow from operating activities. So according to this, we will any kind of receives, any kind of payment will be there. So that will be deducted here. So that will be called as whatever the value will be remaining after deductions and additions, that will be taken as a net cash flow from operating activities. Next, you can see that cash flow from investing activities. So what will be the investing activities? So where you're investing your money. So purchase of machinery. So if you're purchasing any machinery, that will be deducted because cash is going outside. So here what we will do, if any cash is going outside, we will deduct. If it is cash, anything we are coming or if we are receiving anything, so that will be taken as a income for us. Okay, that will be taken as a cash inflow. Okay, so that's why the in bracket, whatever the amount will be there, in bracket, whatever the values will be given, that will be taken as a negative value, that is outflow value. Okay. So here proceeds from sales of machinery, proceeds in the sense profits. Proceeds will be here profits from the sale of machinery. If you're selling any machinery and if you're getting any profit from that, that will be taken as a positive value. So whatever the value will be there, so that will be taken as a cash flow from investing activities. And certain things will become that if you are investing in any shares, that will be also considered here. Okay, next is cash flow from financing activities. So what do you mean by cash flow from financing activities? So proceeds from capital contribution. So if you're getting any profit from the capital contribution, if you are invested in any capital, so you're getting the profit from that. And proceeds from loan. So after payment of loan, you will get the refund from that. So that will be, it means if you paid more loan, if you paid full of your loan and you will get the redemptions. Okay, for example, I'll tell that. Okay, for example, you're a businessman, you're taken a 1 lakh rupees loan and you're paid full 1 lakh rupees. So when you're going to pay full 1 lakh rupees, your interest will be not taken, because what you are going to do, your interest will be reduced from that. So that interest will be taken as what? Profit from the loan. Okay, you'll get the profit. Next is payment of loan. So if you paid any payment, if you made any loan, if you're having any loans and you make the payment, that will be deducted here. So that will be called as a net cash flow from financing activities. So next, what we will do, net increase or decrease in the cash. So we will see that whether it is an increase or decrease in the cash by adding the major three heads, total three heads we will see. So that will be recorded here. Next, cash at beginning of the period. So at the beginning day, what is our cash available with us, and cash at the end of the period. So what is there with the end of period, what all the cash will be available. So that will be treated as the cash flow from operating activities. So these are the concepts which I wanted to discuss. So this is about subunit 2.2, and in further next upcoming classes, we will go for the unit 3 called as a balance sheet and ratio analysis. And also in unit 4, we will see that what are the, how we are going to treat with the Excel presentation. So I'll be winding up. Thank you for